So this is like a part 2 of tax administration. So here we focus on the element of tax administration. The elements. So the element of tax administration, like I said, we are going to use the acronym FACA. All right. Now, like I said, you can add to it dispute resolutions. All right. So resolution of dispute. So you can add R to it like I've done here. All right. So that is that. Now, what is F? We say F is finding the taxpayer. And it's a very interesting thing. And I had to make an argument for this when I was presenting my thesis. You see, and here we are looking at section 10 of the Act 915, Revenue Administrative Act 915. Now, the law says that the GRA can actually collaborate with other institutions in the nation just to enable him identify the taxpayer. Now, in Ghana, the identification of the taxpayer takes 4 stages. One is TIN. I know everybody knows TIN. Tax identification number registration. Then you will do tax type registration. Tax type registration. Then initial return filing. Initial filing. Then we have the initial assessment and audit. So these are the processes that the GRA uses to identify a taxpayer or find a taxpayer. You see, we have the TIN. The TIN is a tax identification number. Everybody is supposed to have TIN. I showed you my TIN. This is my TIN. So that is that. Now, you see, because it is very difficult to tell people that come and register for TIN. If you do, in 2017, we were all supposed to do TIN. But not everybody was doing it. So what the government said through the current vice president, and that is why sometimes it says that when you criticize somebody, you must praise him for something good he does. They, through the NIA, said that Ghana card is equal to TIN. So you see, and they make the Ghana card a compulsory thing that if you don't have Ghana card, you don't have you can't have a bank account. If you remember in 2018, when they were doing the banking sector cleanup. Now, per my research, before the NIA combination for the Ghana card to become TIN, only 4% of Ghanaians had TIN. Only 4%. 4%. But the TIN Act was long ago, but only 4%. But when they did the conjunction with NIA, we now moved to 84% of Ghanaians having it. So by this, if you remember, we said that one of the things the GRA is supposed to do is to improve information flow among divisions. So now, so long as NIA has your data, GRA should be able to identify you as a taxpayer. So GRA should have at least 84% of Ghanaians in their books as taxpayers, and they are supposed to be chasing them for taxes. So it means that 84% of people should be able to file their taxes. Now, the question is, you that I'm teaching, you are a university graduate, you know about tax. Perhaps you even did something tax in your school. Have you ever filed your tax? That's a great, it's a question. And if you haven't, why haven't you done it? And that was my thesis. Because if I am able to tell the GRA people why people are not doing it, then they can find a way to be able to deal with it. That is that. So now we have 84% of Ghanaians have it. So by 10, they are able to find taxpayers. That's why when you go and register your company at the registrar office, there are GRA departments in the registrar office who will give you TIN. Now, it doesn't end there. So that is the first stage. If you now have the TIN, of course, these are the uses of the TIN. TIN must be shown in all documents in your dealings with GRA. If you send a letter to GRA without a TIN, it's as good as you didn't do anything. You need TIN to clear your goods of commercial quantity from the port. You need TIN to have tax clearance certificate. You need TIN to receive payment from controller and accountant general. You need TIN to be able to file a case in the court. As a matter of fact, I saw a communique which has been so silenced these days. The vice president said that if you don't have TIN, you cannot renew your driving license. Is it a good thing? What do you think about it? If you don't have TIN, you cannot have a driving license. Well, what's your opinion on that?
No, I think it's a good thing. It's a way of expanding the tax base. I think it's a good thing.
Do you know in US, without it, you can't drive? And in US, accountants have offices that they file people's taxes for them. It creates job for them. Yes, it's a very good thing. I mean, come on, if you have that money to pay to buy a car, that V8, and all these people that we see, they could have been brought to book. Could have been brought to book. So you see this one, DVLA. It is there. It just needs enforcement. To be able to transact with the GRA, Controller and Accountant General, Registrar General Department, Lands Commission, Registrar of Certificates, Immigration, Passport Office, DVLA, courts, MMDAs, you need to have a TIN. You need to have a TIN. But these days, we say that it is the Ghana card. So everybody is able to transact with them. So that is why we say it like that. Yeah. So that is why we say it like that. So even to be able to bid a contract, that was it. That was it. Now, it is not only TIN. There is also tax clearance certificate. Tax clearance certificate is a certificate that says that you have paid all your taxes. You have paid all your taxes. Or if you have not paid, you have made an arrangement, a documented arrangement with GRA so that you can have the tax clearance certificate, so that you'll be able to have it. And without the TIN and the tax clearance certificate, you shouldn't have driving license. Now look at my situation. So this thing you see, this is how you get tax clearance certificate. Watch this. I want to request for tax clearance certificate. Look at what they will tell me. So I want tax clearance certificate. Process tax clearance certificate. So you come here. I'm initiating my tax clearance certificate. Have you seen what they've said? Your request of tax clearance certificate on April then was unsuccessful due to the following reason. You have outstanding taxes to pay. Click, and it will show me this place. So far as I have not paid this money, it means I won't have tax clearance certificate. Now, if I want to go and renew my driving license and I don't pay this money, I cannot have driving license, which means government will be forced to have money by force. Because if I drive without a driving license, police will catch me. That is how a system works. That is how it works. But unfortunately, you see, I have to do my part. GRA have to do their part. How come GRA? So if I now check my statement, let's say I'm checking my statement for personal income tax. Watch this. Then I go to this 2022, they say I owe money. Let's see what will come. You see, I have filed my taxes. Have you seen it? I have filed my taxes. So this is the tax I say I owe. But can you imagine that GRA, look at what they have done. In 2022, I have payee. Look at this. Look at the time they put it in my system. Payee credit 2022. Look at the time they did it. Payee December. Look at this. Payee January 2023. So I ask you a question. where are my other payees for the year? Where are they? So you see, you now see the reason. All the other payees, and this is, I was the accountant, I was the one filing the payees. So where are all the other payees that has not come? You see, my salary was small. You see the salary, the payees, very small. My payee should be higher so that you see that my salary was higher. So you see the effect. That is why they are saying so you can't tell me you are not doing your part. That is it. So for the system to work, everybody must do their part. GRA2 must do their part. Unfortunately, that is the system within which we find ourselves. It's very sad. Honestly, that thing is very, very sad on the part of so when the GRA people go to work, what at all do they do? So they go to work, they are going to work, they are going to work. What at all are they doing? Because with this thing, if I file my payee, automatically it should hit. Because I file people's payee. I add the Excel. So the Excel, I put in the thing. So it will automatically hit. Somebody must upload it in their system so that it automatically hits my account. But unfortunately, that's not the case. All right. So that is that. All right. That is for the tax clearance certificate. All right. So that is that. Anyway, there is a process of getting things. There is a form you fill for 2 weeks time, then it is given to you. If it is exceeding 2 weeks, you need to ask questions as to why they are making it exceeding 2 weeks. All right. All those things are there. All right. Then the tax clearance certificate. Now we've talked about that. A certificate that shows that you don't owe GRA, and even if you owe them, you have made a well arrangement with them to actually satisfy your obligation. It's a documented arrangement. So once you are done with that, then you register your tax type. So as an entity, what tax type? So if you are an entity like Famous, the one you just said, it means you have to register for payee. It's a tax type. If you are eligible for VAT, you register for VAT. Whichever one that you are eligible to register, you register. All right. So this is it. So once again, so when you come here, you see here tax type, your tax type. All right. So it will come. If you want to register, you see the tax types that I've registered: stamp, PIT, gift tax, and capital gains. So if I want to add more, I can now register for more. All right. So these are the tax types. So CST, airport tax, corporate income tax, or they are all here. All right. So the ones that are applicable to you, all right, you will select and you request, and it will be added to you. So registration of a tax type is also part of the process. In fact, I'm doing all these things to make it more practicable to you. And that is what you see in my principles of taxation video. If I want to file gift tax, I'll come into my platform, file the gift tax. You see, that is how actually your exam is supposed to be, so that you practicalize it, not just learning the theories. Yeah. That is what we do in CIT. So in CIT exams, the question will be given to you and they will put in a VAT form, printed one. So you will file it. That's how it is. All right. So now you register your tax type. Your tax type registration is actually free. All right. So you just, like you saw, I can just register. It's just free. All right. And it is according to section 79 of a Revenue Administrative Act 915. Because if you fail to register your tax type, if you fail to register, what is going to happen to you is that you will pay a fine of not more than 2 times the amount of taxes you should have paid. All right. Or an amount of 1,000 penalty units. I think penalty units still stands at 10, right? So it is 1,000 Ghana cedis. So you pay a fine. All right. That is that. So whichever is higher. So this is it. If the money that you should have paid was, let's say, 1,005, you'll be paying the 1,005. If it was 500, you'll be paying the 1,000. So that is that. So the 1,000 Ghana cedis, or you can say 1,000 penalty units, compared to 2 times the money that you should have paid, and which you didn't pay because you had not registered. All right. So whichever one is higher is the one you pay. In addition to that, the Commissioner General may authorize the forfeiture of any goods or material used by the person in carrying on his business. So it's dangerous not to register for a tax type. You see, all these things are in our law. As to whether GRA uses it is another thing. So you register your tax type. Then, third thing is return filing. What is a return? A return is just all these things you see. A return is just a form, all right, on the GRA platform a document that you fill to give the GRA information about yourself. So if I go here, let's say I want to file a return. So file a return. They will ask me which one am I filing for. So look at this. So let's say I want to file for personal income tax. This is a return. So the return form, this is the return form. The return form will show, and in level 2, they ask questions like state 8 features of a return form. These are the features. You need to put in your thing. Put in your residence, put in your name, year of assessment, you put it there. The period of assessment, you put it there. Now, where do I source my income? We will come to this. Section 101. We will come to this. Now, where do I source my income? If it is business, then immediately I click business. See what will happen. Have you seen it has opened plenty things? So now it wants to have information about my business. Everything. So my profit and everything. All right. So these are the things. So you see, these classes we are doing, all right. I won't use that as an example because this one is a public, it will go public. People will start hunting me. But assuming you have a business, all right, immediately you pay somebody money or you render a service to somebody and the person withhold tax from you, he will file the tax with GRA. And by that, automatically, GRA should know that you are in a business. And so if you say you don't have business and therefore you are only in employment, you see, only in employment, the person who paid that thing on your behalf has already declared that you are into a business. So you see, all the sources of your income, you open it up and you will fill the information. So a return filing is simply a document that you fill to provide the GRA with information, and you saw the information. It even includes your revenue and your expenditure, everything. All right. So you file it. All right. So that is that. Now watch this. So Famous, your question that you asked me, section 124, it says that you should not file later than 4 months. So this one, the deadline for filing your PIT is not later than 4 months. So i.e. by April 30th of the ensuing month or ensuing year, sorry. So if I'm filing for 2023, by April 2024, I should file my tax. All right, so that is that. So you do it 4 months in the ensuing year. So you file your tax. Now, once you do that, all right, and this is the examinable question. This one is the one that they have been examining. I can show you the past question because it is in the book. You see, so many of us, we don't know how to file taxes. And so therefore, we may need assistance from a professional to file the tax for us. So if you are using an assistance, according to section 29, the assistant, the person doing it for you is not an employee. So in a company, if an employee is doing it, that is not an assistant. When you go outside your office to get somebody to do it for you, that is what we call an assistant. Now, when that person is doing it, the person must specify the extent to which he has examined your document. All right. He has examined your document and state that in his best of knowledge, every information that he has put in there is true and fair. All right. So that is that. So if somebody is doing it for you, that person must specify. All right. That person must specify. Now, if the person has an objection, all right, where a person objects to sign, all right, for that person he is doing it on behalf of, the law says that he shall submit to the other person a written statement, reason for his objection, and sign the return, noting that the signature is subjected to an objection. So that is that. Because sometimes when you are doing this thing for people, they want to tell you what you are supposed to put in. And so when you are putting it in, then it means you have doubt. It means you must state the grounds because you are signing your signature on it. So you must state the grounds on which you object to certain things in it. All right. So basically, that is that. All right. So these are the things. So you must actually have these readings. All right. Now, of course, the filing, you can extend it. You can extend your filing, and we will look at that later. All right. We will look at that one later. All right. So basically, that is that. That is that. So that is it. Of course, we have benefits of filing. If you file, you can get your reliefs. If you file, I mean, you have the correct, and you are being a good citizen. I mean, that is that. It helps you to also register for VAT voluntarily. All right. So that is that. It helps the authority to get information, know the tax net of people. All right. And also be able to give you any refund. All right. So, and also if you give these things to them, it enables them to do a desk audit. They don't need to come to your office. They have the information. Now, when you buy the manual, there is this table in the manual which you should know the dates and the timing of filing. For all withholding taxes, you are supposed to file it within the 15 days on or before the 15th of the ensuing month. On or before 15. Payee, the same thing. VAT is the last working day of the ensuing month. But it's supposed to actually be the last day because of the month. But when we were using the manual system, it was the last working day because you should go to the office for them to do it for you. But now we are using the technology. The technology, whether you go to office or not, you can actually file it on the last day, right? Not necessarily the last working day. I can file my taxes on Sunday, and that is when I normally do it. The same thing, NHI get fund COVID, the same thing. CST is 21 days. CST is also the last working day. But what do we call it? The other one, we call it, this one is communication service tax. The last timing for the return is just goes with the VAT, yeah. But there is another one, yes, payment is also the last working day. Where is the other one? Yes, the excise, which is 21 days. Excise is 21 days. So know these things. Filing of self-assessment, I've told you, not later than the 3rd month. All right, the 3rd month. So that is the one that I said you do in March. Self-assessment estimate. You do that, you break it down into quarterly installment. All right, so that is the annual income, personal income tax. I showed you April. All right, so 4 months, no later than 4 months. Withholding tax 15, payee 15. So payment and filing is the same. All right, quarterly tax installments, everything is the same. So these are what you do to what you should know. All right, please, these things are something you should grab on your fingertips. Initial assessment, you see, once you go to register, and this is the thing that people have been fighting GRA about. You have established your business and you say you are going to GRA to register your business for tax purposes. Once you go, they say pay tax. They have assessed you, pay tax. The tax that they have assessed you is actually this one that they do. But this one, the self-assessment estimate. So when you go, they will do a self-assessment estimate for you, and they will say that pay the quarterly payment for that self-assessment. But the citizen will be arguing that, oh boss, I just came to you to register. You asked me to pay tax. I've not even started my business. I've not made any sales, but you're asking me to pay tax. So you see, the law position is that so far as you are an entity, you are supposed to file and pay quarterly installment. No, what you should be doing is that, you see, you are the one who is supposed to tell the GRA person how much you are supposed to pay. Unfortunately, the GRA officers have been abusing this one. They now want to tell you how much you want to pay. If I come, I've not started my business, and I say that per my own estimate, I feel like this year I will make a revenue or a profit of 1,000. So my quarterly installment is like, let's say, that will 250 Ghana cedis. Then I pay my 250 Ghana cedis. But the GRA people sit in the office, they want to do the estimate for you, and that is not from the law. You are the one who is supposed to do your own. Of course, we have the Commissioner General's assessment also there, but I want to do my own assessment because it is a self-estimate, self-assessment estimate. All right, so that is that. So if you can argue yourself along the way, you have it. Then we have assessment, and that is what we are coming to talk about. There are two types of assessment. So that is the A, assessing the taxpayer. A. So assessment. There are basically two types of assessment. We have the what we call the self-assessment. You are doing it yourself. And we have the Commissioner General's assessment. So the self-assessment. Assessment means calculating your own tax liability. So the self-assessment, you do it yourself according to section 122. So a person who pays tax by installment shall file that which we talk about, quarterly tax installment. All right, so you shall do it, including all your foreign incomes. All right, you shall do it, and we have the benefits of that. All right, we've talked about the benefits of assessment. Then we have the Commissioner General's assessment. So the Commissioner General's assessment, we have 4 under it. We have the provisional assessment, and that is the one I just spoke about, that when you go to their office, they want to be the one doing it for you. All right, so they insist on doing it for people by force. But you also have the self-assessment, so you can argue to do your own. So it's the same thing. It's either you do it yourself or the Commissioner General will do it for you. All right, giving the information that he has gathered. Because when you are registering your business, they take the CVs of your directors. All right, and they will use the information they gather there to actually do those kind of assessment for you. So we have a provisional assessment, which is the opposite of this, you doing it yourself or the Commissioner General doing it for you. Then we have number 2, we have the preemptive assessment. Preemptive assessments. When we say preempt, to preempt something, it means you are doing the thing before time. So if the Commissioner General feels like, this guy is coming to Japa, he's coming to leave the country, this guy, very soon he will be going on liquidation. Very soon he will be going to prison for life. Therefore, let me just chase him and take all the taxes that he owes me. So that is what we call preemptive assessment. When somebody is about to leave the country indefinitely, cease his activity, or has committed an offense under the law, which is going to go for a long time, the Commissioner General shall preempt and assess him. All right. The preemptive assessment is not a final tax assessment. It's just a preemptive assessment. All right. And whatever you pay will be credited to your account. All right. So basically, that is that. Then we have 3, adjusted assessment. So the adjusted assessment, if he did a provisional assessment on you and new information comes to light, he can now do additional assessment on you. That is what we call adjusted assessment. Then we have the final assessment. Final assessment is the one that they come to your office, take your books, audit everything, then they assess you. They will give you your liability. All right. So basically that is that. Please, at this point, any question? Any question? All right. Yes, your question.
I was asking, the withholding tax exemption certificate, is it given to the supplier or the customer?
It is given to the supplier. The customer will be the one paying the money, right?
Okay. So
Yeah, so
if
it
it's
is given
given
to the
to
supplier.
Okay, so it means that the customer will not withhold, but rather will
Exactly.
pay everything to the supplier.
Exactly. Exactly.
Okay.
Yes, any other question?
And another question, with, let's say you pay the tax on time, but filing the returns is late, will you pay a penalty?
Yeah, you pay a penalty. But these days, you can't pay the money unless you are paying it on account.
Even
Because
after.
yeah, no, this is it.
Yes,
Let me
yes.
show
So
you.
you do the pay on
Because you have to, if, for example,
account.
yeah, because it's not possible to say you are, okay. So let me refresh this. So remember, for example, if I have filed my tax, when I'm paying, it is what I filed that I'm paying. So when you have not filed, then what are you paying exactly? So you see this one, I have filed. So if I'm paying, pay now. All right. So it means, how then did you pay when you have not filed? So therefore, it means that what you did was to go here and did pay on account. Are you seeing it? I see my screen. So it means you paid on account. And the paid on account, you put the payment. What are you paying for? You select any of them. Then payment period, you put there. The amount you are paying, you
Yes,
rather
yes.
put it here. But so you
Yes,
see, so that is when you have not filed. But the day you go back and file, you pay penalty. And I will explain it to you. There is a difference between interest and penalty. It's not the same thing. Interest is on the money, penalty is on filing. There's a difference. So probably your question was trying to say, will I pay? Your question on penalty is actually a question on interest, because you say you paid early. Yeah. So it is for filing. Filing is filing. And in the foreign country, especially in US and UK, filing is more important than paying. Because once you file, you have just communicated that you owe the government. That's fine. Anytime you are ready to pay, pay. Whichever way it is. If you delay in paying too, there is an interest. We will be doing that. We will be doing that. Yeah. So now let's say they have assessed you, but you disagree with the assessment. So we are going to talk about objection. That is what we call dispute resolution. Objection. In the objection, there are two processes that you can use to object. We have the administrative process and we have the judiciary process. So you can take it to court or you can deal with it. The word for amicably, what word did we use that the Commissioner General can settle the thing with you amicably? What word did we use?
Compound.
Compound. All right. Yeah. So we spoke about it. So that is that. Now, let's say they've come to you, they've done audits, and they've given you an assessment. And you feel like, no, this assessment is way, way over. Or the provisional assessment thing we talked about, either the Commissioner General does for you or you do it yourself. Let's say Commissioner General has done it for you, then you do it yourself, and you have different figures. It has happened to me before. But in my case, the Commissioner General's assessment was lower than mine. And I filed my own in the system. GRA2 also put their own in the system, my system. So if you are me, which one will you go by? Which one will you use to pay the quarterly installment? So I went to GRA and I said, Oga, who am I? If the Commissioner General is saying that I should pay the lower figure, who am I? They said, no, you know better. I said, me, I know better than the Commissioner General. No, I can't know better than the Commissioner General. Yeah, so those are the things. So there are objections. If it were to be the other way around, then I will object. And the process of objecting is that anytime the Commissioner General serves you a tax decision, if he gives you a letter as a tax decision, you have 30 days to object from the day of notice. 30 days to object. And the 30 days is from the day of notice. So if he gives you the notice of assessment, then you don't object after 30 days. It means you have accepted it. That one, there's nothing you can do. But look at the thing. So if in 30 days you want to object, then you can start the administrative objection process. Now let's look at the administrative objection process. So here you have it here. I say that you have to write to the Commissioner General in writing within 30 days, all right, notifying him about your objection of his tax decision. Of course, that 30 days, if you feel is short, you can write to him for an extension. All right, you can write to him for an extension, and that is what I put it here. But the extension, you don't wait for the thing to expire before you extend. You just write before the expiration date, all right, or the expiration date to extend it, stating the grounds for which you want to do this. Probably you have traveled, probably you are sick or anything. Me, in my office, if a GRA officer brings me even a letter to do a tax audit, I send them prior to the date they will come that, please, I'm traveling. My company is sending me on a 2 months training, and therefore, I want to extend the audit for 2 months. Or I'm not traveling, but I want to organize myself before you come. So give me 2 months. Yeah. So that is that. Now, once you give them the letter for the extension, and these days, this is where you do the extension. You don't write a letter to them anymore. You come here and you do request and cases. Make a request. This is where you put it. Have you seen it? So request and cases. Make a request. So here you put in the case type. Request for extension, request for filing, extension, general case form, raise a tax objection. Have you seen that? So this is where you do it. See, everything is on the platform these days. Everything is now arranged on the platform. In those days, you write a letter, but this one, this is how you go about it. So the technology there, it has come to actually help us, but as to whether we use it. So my thesis about why aren't people using the technology to file taxes? Why aren't people using the technology to pay taxes? And some of you, I gave you my questionnaire to fill, if you remember. Yeah. So those days, Famous, you were in the CR class, right? I think I sent it to the class those times. So that is that. So you file for the extension, all right, and when your reason is reasonable, then they can grant you the extension. Now, the Commissioner General, the objection that you have raised will not be entertained, and this is where somebody took the Commissioner General to court, but unfortunately, the person lost the case. Now, watch this. They said that your objection will not be entertained if, in the case of, let's say, import taxes and duties, you have not paid all your taxes. So if you want them to listen to your objection, they say that pay all your outstanding taxes, including the one you are objecting. Have you seen that? So the guy was saying, the thing, if I wanted to pay it, why will I object it? So why are you saying before I can object, I should pay the full amount first? So if I object and I win, would GRA refund my money? And you see, I will show you the process GRA uses to refund money. That tells you that when your money goes to GRA, there is no way it is coming back. So the guy took it to court, but he lost. So he says that in the case of import duties and those things, you have to pay all your outstanding taxes. But in the case of any other tax, like let's say your PIT, your CIT, or anything, you have to pay all your outstanding taxes, including 30% of the one that you are objecting. 30%. So the guy was like, in the case of custom, you say I should pay everything, including the one I'm objecting. In the case of income tax, let's say you are saying that income tax, I should pay all my outstanding taxes and also pay 30% of the amount that I'm objecting. If I have the 30%, why am I objecting in the first place? So, but he took it to court, he lost, and still this one is in our tax law. All right. So that is that. That is the so. If you don't pay, they won't even entertain it. Now, if you pay and therefore they need to go ahead to grant objection or anything, the Commissioner General, it says that no, before this, we are told that if you are able to go through everything, what you see is that the Commissioner General has the power to waive all this one. this 30% payment and or pay everything, he has the power to waive it off or vary it or suspend it. But knowing them, they won't. They won't. All right. But after all these things, the Commissioner General is going to take into consideration your objection. He can accept your objection, he can reject your objection, or he can vary it. But he's supposed to respond to you in 60 days. In the old law, it used to be 90 days. But he's supposed to respond to you in 60 days. That is 2 months, all right, of his decision in respect of your objection, whether he has accepted your objection or he has not accepted your objection. Now, the law says that if after 60 days you have not heard from him, you should treat his silence as a rejection of your objection. All right, treat his silence as a rejection of your objection, which means you can go to the next step. Now, usually, the next step used to be going to court. Just a minute. All right. So, in the old law, if you want to go ahead with the next phase, you would have gone to the High Court for a judicial one. But in 2020, there was an insertion into the law. They brought in Section 44. And Section 44 came to actually take the place of you going straight to the court. And so they now set up a tax court. GRA now has, we call it the Tax Appeals Board. So Ghana has that. Their office is unknown. We don't know where they are located, but they are there. They are there. So they set this thing for us to know that there's a tax court, just like in the foreign land. And in the foreign land, there is a driving court, there is this court, there is rent court, there is that court, all the courts, they are there. But here, we appreciated the executive arm of government trying to give us a tax board as a tax court, but we don't know their office. We don't know their office, but it is created. So we hope to see they will have a distinct office we can locate them. Now, I think they have, but it's not known. It's not that known. Yeah, it's not known. But look at the composition of that board. Look at it. Look at it. We have the chairperson who has not less than 10 years of experience in tax practice, who is a lawyer. All right. And yeah, he has been a lawyer of not less than 10 years. Or if you don't get a lawyer who has practiced tax for not less than 10 years, then it means you need to take a retired Supreme Court judge. Now, why are we creating job for retirees? That's a question. So you need that person to be the chairperson. Then you need 2 retired officers of GRA, not below the rank of Chief Revenue Officer, who qualify to be appointed as tax consultants. Now, that one too is a retired person. 2 of them, they are the ones sitting on the board. Then we have 2 other persons with the same qualification of this chairperson or a Supreme Court judge. All right, also in there. Then we have 2 representation of Chartered Institute of Taxation, another 2 representation of Chartered ICA, and the ICA people, they use because the thing should not be less than 10 years, they use the fellow members, those who have been members for more than 10 years. So they provide these people to the board. Now, this thing is highly political. Highly political. Then we have 2 representation from the private sector who are women. So how many are they? 1, 3, 5, 7, 9, 11. So these are the people there. Just make sure you kind of remember, all right? One retired lawyer who is a tax person, I mean, not less than 10 years of experience, or a retired Supreme Court judge. Then we have 2 people who also have the same qualification. Then another 2 people who held the position of chief revenue officers. Then another 2 people from ICAG, another 2 people from CIT, all not below the having 10 years of practice. Then we have 2 private members who are women. All right, so that is that. I mean, this is something you just have a look at it. All right, then we have something we call, I just put in something here that is called back duty audit. All right, so like you gave capital allowance to somebody you shouldn't have given capital allowance to. All right, so because the person falsified documents, you go back, you do an audit, and when you see it, you can now impose penalty on the person. All right, so it's just like an investigation that you need to do. Now the law says that, you see, you can file after here. You go to the executive secretary of the board, you file your issue. All right, so the same thing, they will now come together to deal with the issue for you. All right, if you lose and you still don't like it, you can go to the court now. So it is now 3 phases: administrative, appeals board, then the judiciary. All right, so that is that. All right, interestingly, we've taken care of, you see, we are talking about the elements, and we've taken care of, so we've done F, we are on A. All right, there is interest and penalties we need to learn how to calculate, but I'll push that to another meeting. All right, so we will learn how to calculate the interest and penalties, pure calculative. So the next time we meet, you should come with your calculators. All right, so for now, we are just looking at the theoretical things. The next time we meet, we are just going straight to learn how to calculate interest and penalties. All right, so I'll jump that one for now. And the questions you are asking me, interest for failing to pay your tax, penalties, and all those things. There are so many calculations that you can have in here. So penalty for failing to file your tax. So the question you asked me, you will look at it. All right, so that is that. Now let me come here to the C. All right, so but if you are interested, you can actually go to my YouTube channel. You can go here, so you go to this, my YouTube channel. What notification do I have here? All right, so you can come here to my YouTube channel. You go to playlist. In fact, so far as you are in this class, you must subscribe to the YouTube channel. You go to the playlist, you see the thing for principles of taxation, and you will see it here, tax administration. All these things that we have discussed is there.
Software where you can manage.
All right, all these things that we are doing is actually there. But you see the hours for that one, it is actually like how many hours? 3 hours, 10 minutes. So all that, the part of the calculation is dealt with. All right, so this objection, we just talked about this objection. All right, so you will see the calculation also being done. So you can take the lead and see how we work the calculation. But when we meet another time, I'll go through the calculation with you. So this is there. The fiscal policy too is there. All right. So the fiscal policy on your syllabus is there. You will need to also know about withholding tax. It's something everybody must know, because without which you will fail the paper. So you can take the lead. Employment taxation, I've done such. Capital allowance, you need it. Partnership taxation, you need it. Business income taxation, you saw it. Part 1 and 2 is the realization, and all these things you are going to go through and do. But like I said, you should subscribe, take the lead, and watch these things way before we even meet. All right, so that is that. So I will definitely create another playlist for advanced taxation, but some of these videos will be repeated there already. So you can actually go there and have and just enjoy yourself way before time, before we meet again next week. But let's focus on collecting collecting the tax assessed. It's very, very tricky. It's a very tricky area, and you should be mindful of that. Now, the thing is that the law says that any money, and that is the last thing we are doing, all right, for today. Because when it comes to the accounting for tax assets, it's outside our syllabus. How GRA accounts for the money is outside our syllabus. So what we are doing actually ends here. So let's talk about collection of the tax assets. Collection of the tax assessed. All right. So let's look at it. Now, the law says that any money that is due the government must see that you are liable and must use all means possible to collect the money. So tax due the government is a debt to the government, a debt by the taxpayer to the government, and so therefore they must take all necessary means to collect it. Now here we look at two main way, the two broad ways. So we are talking about payments, and we are also talking about recovery. So it's either you pay or the GRA takes steps to recover the money. All right. So those are the two broad sections that you can see here. All right. So now let's talk about the payments. All right. So you can pay. I mean, whether VAT, whether you see, we said the VAT and the income tax are now collected by the DTRD. So whichever one it is, you can actually go ahead and pay. So we said that the tax is payable at the time specified under the law. We saw it. Some of them are 15th of the ensuing month. Some of them are at the last working day. Some of them are 21 days and all those things. All right. So that is that. So the time that is stipulated. But however, when we talk about preemptive, do you remember what is the explanation I gave you for preemptive? Yes, preemptive. Preemptive tax, yes. What is the explanation I gave you for preemptive?
You said like more like payment in let's say simply put payment in advance, where the commissioner has to, I mean, put things in place to ensure that the tax is paid even, I mean, ahead of time.
Not
Paid,
necessarily that, but there is a caveat that somebody is about to leave the country, somebody is about to be in prison, somebody is about to cease his action. He now,
yeah.
because if you go, he won't be able to collect the money. So he now takes steps to collect the tax, all right, cause you to file and take the money. So for preemptive, the date for the payment of tax will be the date specified on the notice. And for an adjusted assessment, it is 30 days from the day you were served with the adjusted notice. All right. In the case of interest and penalties, the specified date, all right, that one too is given to you. So to each one of the every time has its own. All right. So in respect of receivers, it is 7 days from the sale of. Please, who is a receiver? Do you have an idea who a receiver is? You know, if somebody dies, the person who comes to say the property is with me and according to the will, I'm supposed to share it A, B, C, D. You see those people? Those are the ones we call the receivers. All right, those are the ones that we call receivers. Then we say with respect to funded in respect to amounts refunded in error, the same thing, 7 days after the CJ served the notice. So both receivers and error amount is 7 days, 7 days. All the others are the dates that are specified in the letter that they sent to you. All right, so that is that. And in respect to a tax payable, respect to a tax liability payable, a manager, and I will explain that thing to you. I will explain it to you. Some managers become liable to taxes, not the entity manager of the entity's tax liability. It is possible. So that is it. That is that. All right. So now that is the aspect of the payment and when the payment ought to be done. Of course, you can always extend these things. You can always write to the Commissioner General for an extension. So you see, before the time you can extend, and your extension will not exceed 12 months in aggregate. You can extend 2 months. When the 2 months is about to catch up, you say, oh, please let me extend. But your extension shall not exceed 12 months in aggregate. It shall not. Let me just put the not in bold. All right. So that is that. It shall not. So if you can't pay, write for an extension. All right. So that is that. Because they will put in the date you are supposed to file. You are supposed to pay. So the date specified 30 days, 7 days for receivers, and for error one for manager, the same day the tax was liable by the entity. If you feel you cannot make it, you have to write to the Commissioner General for an extension. In fact, when I'm teaching you tax planning, I'll always tell you that always write a letter for the extension of the tax payment. At least, if you don't know, if you're able to extend your tax for even 2 months, it means you could save the money for 2 months and interest before you go and pay the tax. So you have done a tax planning. You will look at that. All right. So basically, that is that. But let's talk about recovery of taxes. Like I said earlier, tax is a debt due to the government. All right. On the date it becomes payable. And so therefore, all the things that the Commissioner General needs to do to collect the money, he has to do. He has to do. All right. So that is that. Now, the things that he can do is number one, to place a charge on your assets. And please, these things, be mindful of them. A landed property, he can place a charge on your landed property. That is what can happen. You see, this is what it says. In the case of a land or a building, the Commissioner General on application, it says CJ files application to register the charge with the Chief Registrar of Land. So what they are trying to say is that you have your land, but the Commissioner General will place a charge on your land, such that he becomes a person who has an interest on your land. Commissioner General will have an interest on your land. So that is what will happen. That is what will happen. So now, once he does that, he will serve you a notice that he has placed a charge on your asset, which means that, let's say the tax liability that you have is, let's say, 50,000. You have a land which is worth 500,000. When he places a charge, it means he owns 50,000. So anytime that land is sold, a 50,000 must come to the Commissioner General. Or he can also make it in such a way that you cannot even sell the land in the first place, depending on the money that you owe. So that is it. He can create a charge on your assets. But that charge, he must service to the land registrar. Because if it is not there, you can sell the land and somebody can go and do. But if he has a charge and you sell the land, when they go to the registrar of lands, they will see that there is a charge on the land. All right, so that is that. So when they sell the land in case of anything, then it means that they have to settle the Commissioner General first before the money can come to you. So that is placing a charge on the asset. All right, that is a landed property, a landed property. But you see, what about talking about all the other types of property? All right, that one too, they can place a charge. All right, but those ones, you see, not all properties are registered at, let's say, the Registrar of Lands. What about the other ones that they are not at the Registrar of Lands? That one, they need to make a public notice. GRA will make a public notice on those assets. All right, so please, that is that. Because that one, you cannot go to anybody and say that you have seized it or you have placed a charge on that. All right, you have to make a public notice. Some of them are even an intangible asset. So you have to just make a notice on that, a public notice on that. All right. So basically, that is him placing a charge. Of course, the notice is served you with all the details. All right. All the type of asset, the charge, and everything that he has put on. You don't need to memorize all these things. You just need to understand and state the law position of that. All right. Paraphrase with your own understanding of how it is supposed to be. All right. So that is that. All right. So that is it. Now, what if the Commissioner General is selling an asset? Do you remember that we were talking about some of his powers? We said that he can actually seize your asset of your document. For how many days? Yes. For how many days?
6 months.
In respect of which one? Because there is
Both.
both, but the extension was how many days for the two document and the assets?
The extension for the documents is an additional 6 months, and the extension for the assets is up to an additional month.
All right, so that is that. Now we are looking at a situation where the Commissioner General is going to sell your assets. All right, you're going to make an auction for your assets. Okay, so if he's selling it, it must be by a public auction. So he cannot corner one way and sell to another person. It must be a public auction for people to actually come in and apply for. And in the case of an interest in a building, he has 30 days after taking possession to actually do the auction. In the case of perishable goods, he has 24 hours after taking the possession. And in the case of any asset, he has 10 days after taking the possession. All right, so building 30 days, perishable goods 24 hours, then any other case, 10 days of taking possession of your asset. This is the one they are abusing. The customs are abusing the most. They are abusing this one the most. They don't even do the auction. Or for all you know, it has been sold. If you ask for the documents for the public auction, you will not get. In fact, we are living in a very bad nation. Sincerely speaking, sometimes these things are very annoying. That people take, you see, I can tell you that the commissioners that can be appointed, that they don't even know the law. They don't. They just don't. But if you don't and you are given the position, you should let a person who has the law just be close to you, so that the person tells you the needful. Or you have the position, even though you are not a lawyer, just read the law for your work. I mean, who will go to a workplace without knowing the code of ethics and the things that makes his KPI? Unfortunately, they don't care. They have the V8. That's all. It's very sad. Very, very sad. Some people makes our education looks rubbish. Yeah, so they say that, so it is only in Ghana they say that school is not the something for making it in life. But how can you make it in life without an education? How? How? So it is only in Ghana we say that. It is only in Ghana. Yeah, we understand that not all, like, not going to do PhD. It's not, but you need to have education. Of course, if you say you don't have education and you have the money, people with education should manage your funds and they can throw you away. As simple as that. They can
Please,
chop your
I have
money,
a
throw you
question.
away. Yes, please. Go ahead.
Yes. I think there's a part I didn't really get. I wanted to
Which part?
ask, on what grounds will the Commissioner General sell your assets?
Sell your assets. Is that your question? On what grounds would they sell your assets?
Yes.
Okay, so like we explained,
Yes.
it's coming from section 51. This statement. Tax is a debt due the government on the date it becomes payable. If you owe me, that is the ground on which they can sell your assets. You owe them. You owe money. They have seized the asset. They need to collect their money. So they are going to sell the asset to take their money. Please, do you understand?
Okay.
Because you cannot
Okay.
just say
Yes.
you won't pay them. Yeah, so they will seize your assets 6 months, and they are basically saying that we have seized your assets for 6 months. Come and tell us something. I mean, you can't just be there. So they need money, and so therefore that is what will happen. Now they will sell the assets. If it is a landed property, it's 30 days. If it is a perishable good, 24 hours. If it is any other asset, then 10 days. But when they finish selling the asset, it's not like they are going to take all the money. This is how they utilize the money. First, on the cost of charge and the sale. So this is not the asset itself. You see, when they are selling, they incur cost to sell. So when they finish selling, they will take the amount they spent in selling. That is one. Then when they finish, they will now come and take the tax you owe them. Then, so that is it. So the tax you owe them plus the interest. So first is the charge, the cost to sell. Second is the outstanding taxes and all your interest. Third is any other tax you owe them. Now let's illustrate this. Let's say you have a land, so they seize the land. Let's say the land is worth 5 million Ghana cedis. All right. Now, how many days by law do they have seizing your land? How many days? Cessation of the asset. How many days do they have to seize it?
6.
6 months.
6
Okay.
6
months
That is
months,
fine.
with an extension
With an extension for how many?
of
a
1
month.
Good. It's good you are
additional
learning. Now, let's say
month.
you didn't do anything, and so they have to now sell the asset according to Section 51 to be able to recoup the money.
1 month.
1 month, 30 days. Please don't say 1 month, say 30 days, because some of the months are not 30 days. Okay? Be careful. This is a matter of law. All right. So that is that. So this is it. Now, they finish selling. Now, let's say they sold the assets. And when they sold, the land is 5 million. But when they sold, probably let's say they had 6 million. But the cost to sell, they did adverts and all those things, all right, before they could sell. And let's say only God knows how much they will spend in selling that particular asset. So let's say they spend 500,000 in selling the assets. All right. So the first thing they do when they get this 6 million is number one. So let's say we have 6 million. First thing they do is to take what? The cost of sales, which is 0.5 million. All right. So it means it will be left with 5 million. Now, assuming that you owe taxes of, let's say, $3 million, Ghana cedis, sorry, they will now take the 3 million plus the penalty for not paying the money. And we will learn how to calculate those penalties in our second meeting. So all the penalties, let's say plus penalties also amounting to 0.5, then it means they are going to take 3.5. So this one is income tax you owe them. So that is that. So that is it. So they are going to take it. And when they take it, you'll be left with like 2.0. Now, they will check if you owe VAT. They will check if you owe any other form of tax. Then let's say you owe VAT of 1.5. They will come and check and deduct that 1.5. All right. Then the remainder of 0.5, they will call you and give it to you. So that is how it is. All right. So that is how it goes. All right. So that is a way of recovering the money. So that is it. Seizing it and selling it is one way of it. Placing a charge on it. All right, is one. Then we have another one. Restrain a person. Now, we talked about preemptive tax, that somebody may be leaving, and so therefore he has to look sharp and collect the money. Now, what happens is that he can stop you from leaving by the CJ for immigration. His name is, how do you pronounce this one? The comptroller. The comptroller general of immigration is the one that he will send a letter to, that Oga, don't let this guy leave the shores of the country. And he can do that for how many period? 7 days. All right. So that is what is going to happen. but he can extend it. So the extension shall come from a high court. He can receive a letter from a high court to extend it. Without the permission from the high court, you can't exceed the 7 days you are telling the person not to travel. All right. So basically, that is that. That is another form of restraining a person. Then we have restraining orders. Restraining orders. So another one is that if you fail to do your things under the law correctly, he can distrain the goods, or he can cause a person to search you. All right. So those are the things that the Commissioner General can do. All right. So on reasonable grounds that you have not paid your taxes or you will not pay your taxes, the Commissioner General, for like, if you will not pay for 30 days, this is what will happen after a 30 days warning that, please, I've given you a warning, come and pay, come and pay. He has the right after 30 days to actually cause, with a reasonable force, distrain the goods, or it's another way of saying detaining, all right, or distrain or search your premises, or any place that you are. All right, so that is that. He can do that. He can do that. He can issue a restraining order, all right, that you cannot even use a good. He can actually say that you cannot go to your premises. So there are some premises they will chain bound it and lock it and restrain you from going to that office. All right, so they can actually do that. All right, so those are the things that can happen. Then managers of an entity. I told you before that managers of an entity can be liable for the taxes that the entity is not paying. So here, if an entity fails to pay their tax on time, or they are not paying, the manager is severally and jointly liable, and it is to him personal. It is going to affect him personal. An amount payable to the CJ by the manager is a personal income tax liability. Of course, when he pays it, he can go to the company to collect his money back. But as you are failing to pay, you are jointly and severally liable for payment, irrespective of whether the entity has ceased or it exists. You, the manager, you are liable. Of course, this one, there is a caveat. This does not apply to a manager who has exercised a degree of care and diligence, all right, or who just assumed office 6 months to the time the liability came. So managers are not free. They are not free unless he can prove that he does his work diligently and everything, or he just assumed office 6 months prior to the time of the debt they are talking about. So he is it prior, be after? Yeah, it should be after. So let's say they had a tax liability of, let's say, December 2023, but you assume office in 2024. So for the first 6 months, you will not be liable for this liability. But after the 6 months, it is meant that you should know better. You have all the information, and therefore you become severally and jointly liable. All right, so that is that. The tax amount payable is your personal income tax liability, even though it is the company that is owing the figure. And so you become severally and jointly liable. All right, so basically that is that. Then we also spoke about receivers, those that receive people's property upon their death, or they are beneficial, or let's say they are trusts. All right, those who hold things in trust of people. All those people are also supposed to pay the taxes. All right, so GRA can charge those people that the assets you are holding to go and distribute to the family members, there is a tax liability on it. So you, the receiver, you become a person who is liable to actually pay the tax. All right, so that is that. So that is what the law is trying to say. So instead of the asset going to the family members, you must first assume the tax liability. All right, because the goods are in your possession. So if it is in your possession, then the tax too is in your possession. So you shall be liable to pay the tax. All right. Sometimes we call them the executors. All right. So sometimes they are lawyers, All right, so basically that is that. Now look at this. A person who is appointed a receiver of an asset in a country shall notify the Commissioner General 14 days to his appointment, so that the Commissioner General can chase you in case of any such liability. So immediately you are appointed as somebody who is supposed to receive, and I've given the so and so my will and those things, that person becomes liable for the taxes. All right, so that is that. So immediately the CJ received the 14 days notification, he will let you know of all the taxes that you are supposed to pay. Again, the CJ can also recoup his money through a third party. So this one there is very simple. It's very simple. So this is the Commissioner General, and AMA entity owes tax, but AMA entity has receivables in his books. So these people are supposed to be paying this entity. The Commissioner General can write directly to this guy, please, this company is owing me. So before you pay him, pay us the money that you owe us. All right, he can instruct the third party to actually pay the money. So the third party here, the tax, oh, all right, let me check this.
So in this case, whose duty is it to inform the entity?
The entity whose duty is to inform the entity, as in
I'm the entity, someone is owing me, and you are saying that because I'm owing you, you are going to the money from the person owing me.
Yeah.
So is it the duty of the CJ to let the entity be aware that we are
the
taking
CJ
the money?
will serve this guy. We are taking the money from this man. And this man is obliged to, because the CJ takes your balance sheet, they know your receivables. All right, so you will notify everybody. Now, at that point, this guy becomes liable, so he should not make joke of it. He should not make joke of it. Other than that, even the entity will be spared and he will now suffer. Yeah, so that is that. All right, that is that. Okay, so I mean, then we have recovery from an agent of a non-resident person. The same thing applies. All right, so it's just like the third party. All right, so if you have a non-resident person and you have an agent on the ground, the CJ can work with the agent to recoup all the taxes that is supposed to be paid. All right, so basically that is that. All right, so now, I mean, the rest are for tax refund, and tax refund too is another thing maybe we need to go through. If you want your money refunded to you, you must apply for the refund. All right, so you must apply, and I've shown you the platforms for application. Is the soft copy we are using now, and the CJ will look at the issue and give you his decision of the refund, and I mean the payment of the refund will be done. All right, so that is that. Now, be mindful of the fact that if the Commissioner General fails to pay the refund within 90 days, then he will be liable to pay an interest of the amount. All right, the interest is calculated 50% of the statutory rate. The rate for the interest is 50% of the statutory rate. The statutory rate is the Bank of Ghana monetary policy rate. All right, so you will use that one to pay. If the Bank of Ghana monetary policy rate is 25%, 50% of that will be what, 12.5, right? All right, so basically that is that. All right, that is that. Now, Ghana Revenue Authority general refund account is actually created, and normally they put in not more than 6% of the monies that they've collected inside the account, so that if in case there is any refund to be made, it is done. Now, before I let you go, in GRA, by law, they are supposed to maintain 3% of all the taxes they collected. All right, so all the taxes they collected, this is 97% that goes to the consolidated fund, 3% stays with GRA. A GRA is a body corporate. So they are supposed to actually do businesses. So GRA pays their own salaries to their staff. So they determine how much to pay their staff. That's why in Ghana, their payroll is the best. To be on GRA payroll is the best that you can get. That's why all chartered accountants are shifted. All chartered accountants in public sector are normally shifted to the GRA payroll because that's the best. All right. Other than that, you'll be on controller and accountant general. Anyway, so before I let you go, let me ask you this question. What are the obligations of a person who prepares or assists in the preparation of tax for a remuneration for somebody? Somebody who assists someone to prepare tax, what are his obligations? Any idea? We discuss one or two be about them. Just to wrap up in 5 minutes. Do you remember?
One obligation is for the person to state that he has done the filing to the best of his ability.
Yeah, it's true. I mean, those are the things. Once you've remembered that, I think the others will come. All right. So that is that. I mean, so then explain the term a possessor of an asset, like a receiver. You remember? All right. So those are the things you need. And these are CIT questions. This is not ICA questions. These are CIT questions. And these are the same questions that ICA will borrow to examine you. So this is what you have in the book. This is what you have. Look at another CIT question. So it's the same thing in another way. Explain what is a tax return as provided under the second schedule of Act 915. B, the obligation of a person who files taxes, offenses committed by entities. So in filing taxes, so you read the story, you see, and they just will copy this and paste it in your paper. Famous, you are one of the people who are with me in the face-to-face class. Nobody failed tax. It was 100%. Nobody failed it. You saw it. Everybody passed it. With the audit too, everybody passed it. Yeah, everybody. In fact, a guy that I thought would not even make it, the guy who wrote it before, that guy is the only person that falls short in my March diet. I was surprised because he's the only person I've taught and he failed. But when he came the second time, you know the marks he had? He had 75. Yeah. I asked him then what then happened. If you remember that guy, yeah. If you remember that guy.
Because I was in the task class. So
yeah, you weren't in the task class. Yeah, it's true. All right. Yeah. So that is that. So these are the same questions. You see, you are doing ICA, but I keep putting CIT questions. Write briefly on this. Why must he register to pay income tax? Register. When must he register? So if you get this and I've solved all these things in your this thing, I've actually solved all the questions, so you will see it. All right. So that is it. So guys, I'll meet you next week and we will continue from there. Is that okay?